So good to see everyone. Let's get started. So today we're going to be focused on short-term trading for that short-term income. And when they say that, we've had a number of sessions before, and when we go over that short-term income, I'm talking about that, basically day trading, right? I'm not talking about the swings or positions or anything like that, because I really want to define, when I say trading for that short-term income, I want to define the way, what is that? What am I really saying? So I'm talking about, for me, for the years, it's been those early morning hours in the U.S., primarily 7 a.m. to, I'd say, 9:30, usually about 6 a.m. to 9:30 is when I'll be watching. So that's an hour into the New York, stock exchange open. So about 6:30 to about 9:30 Central Time. Okay, everybody very clear on that? All I'm doing during that time, and it's very consistent, all I'm doing during that time is going over the same picture that I'm going to show you here today. That same picture over and over and over. So it all starts with figuring out where the orders are. In other words, where significant demand is and where significant supply is. But equally as important is where is it not? Where is a price level on a chart where there's no significant demand and no significant supply? That's just as important. So we need to be able to see those two things on a price chart. Okay, makes sense? And it's interesting because we just had something develop here in the euro. I don't know if anybody kind of saw this, but let me bring this chart to a 5-minute. Okay. Let's do this. Anybody short the euro right here? Yeah, we're looking at the euro futures at the moment. This is a pretty classic little setup here. Jando, you're short right into this area that I'm pointing out here. This is a pretty standard setup. This is like the same thing we always go over here. All right, this little level right here. Actually, you're probably going to bring it up here, yeah. Okay. Yeah, so you shorted, whoops. I'll just keep it nice and simple. Take that. So you took this trade right here. You took it right here on this pullback, right? Okay. So here's the thing. Let me really explain this to you. So we need to be able to see, remember, we need to be able to see where the, understand that it's unfilled orders that move markets and cause markets to turn, right? It's not filled orders, it's unfilled orders. In other words, demand that has not been filled yet, supply that has not been filled yet. That's what causes market prices to turn and market prices to move. But remember, the chart shows us the opposite of what we need to see. The chart only shows us filled orders, right? It's a fantastic system if you think about it, because most people are never going to realize what we just talked about there. So we need to be able to look at the chart that shows us filled orders and figure out where the unfilled orders are. Okay. Yeah. So if you look at this little area right here, okay, prices come down, they're basing here. Now, by the way, if you're short, bring your eye over to the right a little bit. You're probably going to get some demand coming here, because these orders, it looks like there's some orders sitting here that have not been filled yet, right? But I wouldn't be worried about prices screaming higher. We've got this level here now. Okay. Yeah, so Edward, that's exactly what I'm getting to now. So I want to take a really deep dive into that. Okay. Because there's two ways to do it. Number one, and which is what I talk about a lot, because this is really the safe way to do it, is make sure that this initial move, and Edward, I think this is what you're talking about, make sure this initial move is at least 3 times the size of this before we know we have a level, right? Now that's definitely the very safe and very simple way to do it. Okay, but the reason why we're doing that is because of what's over here to the left. So let me point that out. prices are basing here. When prices move down out of this area, that's when we know that supply exceeds demand here, right? When prices drop away from this area, we know supply exceeds demand here. Okay? We know that for sure, because that's the only reason why prices dropped away. There could be no other reason. But whether you have a trade or not when that happens depends on, your profit zone or profit margin. So the very simple first way we can do that is we could say, you know what? We are only going to call this a supply zone if prices move 2 or 3 times away from this level. Meaning, if this is, let's just do it. So if that's 6 ticks, we need an 18-point drop away from this level before we're sure to rally back up to that level, and that's a pretty good trade. Okay. But the real reason why I'm always suggesting that, especially when there's new people in the group, is because I want to make sure that it's not so much the profit zone that I'm concerned about. I want to make sure that all the significant demand, close to the supply level is not there anymore. So that's the easy way to do that, right? But you've probably seen me take many trades just like this one here where price didn't move far away from the level. And so here's the point. What we're really concerned with is all this stuff over here to the left. So obviously there's some demand here. The only thing that's going to tell me that most or all of this demand is now filled or gone is if prices trade to this whatever the bottom of this wick is right here. So 33.75. As soon as this drop in price takes prices down to 33.75, then I know that there's probably not a lot of demand left. At least not a lot of demand to be worried about. No demand to be worried about. Okay? There's probably little left. But all I need is I need a few buy orders left here just to propel prices up to this level. Make sense? Okay. So given that prices went down to the bottom of this level and then came back up here, we expect a quick move down to the next pocket of demand, which is, we've got some stuff here, and of course you see it even better over here. Does that make sense? So, this is a premium group today. This is not, I don't think there's a lot of brand new beginners with us here. That's why I'm kind of talking at this level. But your number one concern for people that, kind of understand what I'm talking about and have been in a number of these webinars, maybe even taken the courses, your number one concern is not how far this moves away from the level, but has the move out of here absorbed the demand to the left that you're concerned with. Okay. Luca, it's not only possible, but that is what happens, and I was on that side of the business. Okay, and that's exactly what happens. Institutions definitely push prices back to the level. Banks definitely. When I was on the institution side of the business, that's what I spent most of my time doing. Right? The reason for that, again, so Luca, let's pretend you're a bank or you run a trade desk at a bank. You're filling orders for money managers, hedge funds, your really, really, really big clients, right? Okay? And you've got a giant order that you need to sell at this price level or in this range. Right? Well, if your order's too big, what's going to happen? Prices will be trading here, you'll be filling orders, but what's going to happen pretty quick if your order's too big? You're going to run out of buyers and price is going to fall, correct? Okay. Well, now you have a problem. If you want to keep your job, you want to, your division to make money, you want to meet your bonus, what do you have to do? The focus of your department is to fill orders. That's how you get paid. You're not getting paid on, trading performance, so to speak. You're getting paid on filling orders, right? Processing orders. So, when prices are down here, okay, on the level 2 screen or what have you, or the matrix, or if you're in a trading pit, what you're going to do is you're going to wait for things to get a little bit, quiet or calm, and you're going to flash a big bid out there. And maybe you'll get hit on some of it, right? You're a big bank. You're going to announce, hey, the big bank is going to buy right here. Well, what that's going to do is other people are going to see that. And when people see the big institution or, the big, the market maker, whoever it is, the big guy is buying here, what are other people going to do? They're going to buy too. And then the bandwagon starts to get underway. Now you get a green candle. So green candle after a red one here, now all the people that read trading books know it's their turn to buy. right? Now they come into the party because that's what they're taught to do, right? So then they buy, and more people buy, and let me tell you something, Luca. When prices come back to this level here, you're probably still not going to sell right here, because what's going to happen if you start selling right here? The price is going to fall away again, right? Because your order's too big to sell. So what I would do, right? Again, I come from the institution side of the business. What I would see happen all the time, right here, we buy even more. But let me tell you what happens right here. Here's what gets everybody. Right here, where I'm pointing, when prices are into the level, what a big institution does all the time, they look at that bid and they add up, how much, if take the first 5 to 10 bids, the total size of the first 5 to 10 bids, and a banker institution will wipe all those bids out in one shot, and that's why you see this happen, because now everybody's caught on the wrong side of the market. Novice retail bought up here. Make sense? Okay. That's every day. I mean, that was like my main job working on the exchange, and I was in the currencies. Make sense? Okay. So, now someone's got the same problem here. Someone had a lot to buy here. There obviously weren't enough sellers down here, so there's a lot of unfilled, there's unfilled orders sitting here. Okay. What's probably going to happen is you're probably going to see price, if you look at this 5-minute chart over here, you're probably going to see price stay between this area and this area down here. If I bring this down to a 2-minute, this might even be a little more clear. Oh, now we have a lot more information. Now we see we might even have a level here. Let me just do this. Okay. Now we can really see where these pockets of orders are. Okay. Right here, somebody was bidding something, but they only got filled on part of it. Right here, someone was offering something, and they only got filled on part of it. That's what these pictures represent. Okay. Here, same thing. You could do this on any time frame. It's my job to train your eye to see this. Because this is all that happens every day in every market. And you don't have to worry about this not working in a few years. This is how it's always worked, and this is how it probably, I'm sure it always will work. It's just willing demand against willing supply. So I prefer to go back to the 5-minute for a moment. Actually, let me just try the 10, see if this cleans it up at all. Yeah, we can do it on 10. So if I bring this down, I just brought this to a 10-minute chart just to clear up the picture for people that are kind of new to this. So now we've got this kind of bigger area here, and we've got something right here. Okay, not too worried about this. Jano, it all depends on how well you are able to see the levels and understand the odds enhancers. I think last time I was showing you the performance of some people that are doing really well with this in the program. They're doing exceptionally well, but remember, this is all they do. It's like I live in the United States, so baseball's a big sport here. I'm not a big baseball fan, but these guys hit home runs all the time, right? I think it's great, and it's it's fun to see, but I mean, I'm not that impressed. It's all they do. I mean, they should be good at it, If I was just practicing hitting home runs every day, I should be able to hit home runs, right? See what I'm saying? So it really depends on that. Oh, this level, Ashley? Yeah, so the reason why I said I'm not too worried about this level, so your focus, Ashley, right here are the candles, candle bodies themselves, right? These two, we've got a rally, a base, and a rally. It looks good, okay? But if you look inside here, you see how we have this wick that goes all the way down to here? That's a problem. In other words, if there's so much demand right up here, okay, how is it that prices were able to trade all the way down to here during this period of buying and selling? You see what I'm saying? The demand can't be super strong here if prices were able to come down to here. Make sense? All right. Okay. Luca's saying, I do not see any good demand level. I agree, Luca. I don't see a whole lot of strong demand here either. We had levels today, but the demand levels are used up. Okay. Yeah, and Boyke, I would agree with you. Boyke's saying the big boys push the market. I guess I would kind of, the way I the only reason why I would say it a little bit different, you're absolutely right, but the only reason why I would say it a little bit different is because the reality is there are many big funds that end up losing money and go under. I mean, there's billion-dollar funds, every month that go out of business, that lose their money. So what I like to, but you're right, So what in my mind, I look at it as the people that know what they're doing control the market. Yes, typically the people that know what they're doing also have all the money, which means they're the big boys. But yeah, no, I agree. Okay. Euro is ranging in the big picture, and it's ranging between two key levels. All right. So even though on the small time frames you could have had an entry already, you could probably take another one up here. We just want to make sure that there's no significant demand here, and it doesn't look like there is. And I didn't mean to stay on that one forever. It's just you really need to, see the orders by looking at the price charts, because that's all this is. All right, let's go to a different market. How about, should we go to the maybe the Aussie? Doesn't matter to me. Now remember, I just want to repeat this. I'm doing this for that short-term income. I'm finding small time frame levels like that between roughly 6:30 and 9:30 Central Time in the U.S. Okay, so that's 7:30 to 10:30 Eastern Time. And let me tell you, you will find plenty of quality opportunities. There will not be a day where there's nothing to do. You want the pound? We can certainly go to the pound. Let me just see here, though. 1 second. Why don't we stick to the Aussie for a minute? We'll have plenty of time to get to the pound. We'll do the pound next. Is that okay? We're looking at the Aussie futures here. So if you trade the futures, we were just looking at the euro. The euro pays $12.50 a tick. The Aussie pays $10 a tick. So they sound like nice low price points, but just remember, caution, they can move. I mean, that euro, even the Aussie, at $10 a tick, that sounds like nothing, but we've got 5 to 10 of these on, and this thing's really moving like you see it do here. It can add up. So just a word of caution on that. But what's nice is when you're short-term trading, I never do it in the spot market. I always do it in the futures. Okay. So that's not to say it can't work in the spot, but when I've done that, I haven't consistently short-term traded the spot market in a few years. And that's because when it was still a very, very unregulated market, and it just, that's when, every time you got stopped out, you'd never even see the price on the chart. And, remember, 2-3 years ago or so, that problem is drastically reduced by trading the futures. It's a much more level playing field with the banks and institutions. You're not necessarily trading against your broker and so on. So spot market's gotten a ton better, but I just want complete disclosure there. So. I was just reading back here. Schemo, and hopefully I said your name right. Let's see. Forex futures tend to trend better and respect levels more. So you're saying then the Forex, or then the equity index futures? Boyke, yeah, London session's great. I would totally do it there too if you can. I'm just I've just got my kind of routine, my kind of life routine. But yeah, the London session's fine too. Okay. As far as the equity index futures, to be honest, I tend to stay away from the S&P just because there's so much competition there. It's okay, but if you've noticed, if you trade the equity index futures, you'll see the levels in the S&P, and the same level the Nasdaq, same level the Russell and the DAX, and even though they'll all work out, the S&P's like the last one to turn, and it's kind of the big, snail. It's kind of like the Titanic now. Nothing wrong with it. It's fine, But I prefer trading the others, the Russell and the DAX. Make sense? Okay. All right, let's take a look at the Aussie here. So you can see on the daily, obviously we've had a big drop. We've wiped out a ton of demand there. Okay. Let's see. I'm just reading back here. Yeah. So now that we see that, if you look at the daily or even the 240 is probably better. See how this big drop has wiped out all this demand? Okay. Now what we want to look for are short-term supply levels inside this big drop, this big decline. Make sense? Okay, so that's going to be pretty easy to do. And why don't we start with a 15-minute chart? I wouldn't go much bigger than that for the short-term trading I'm talking about. The reason why I'm starting with a 15-minute chart is because I'll quickly see the best levels here on the 15. Well, let me actually take that out because there's so many here. So we've got this level right here. We've also got something right here, and then we've got all this stuff up here. Okay, so let me just put some lines on here, and then we'll go down to a small time frame and be able to easily make decisions. I'll show you why we do that. So you start with a 15 here, put your lines on. I'm not too excited about this because this kind of had the level here. Here's the drop, and actually this is the entry. So let's stick with the other two we have. Now let's bring this down. And here's what happened. So now when I brought this down to a 5-minute, this one is still a fresh level. This one is not. Okay, that's why you do that. All right, so here we've already hit a drop. Price has already come back. Okay, so after doing, looking at those 2 or 3 time frames, this one that's the best level on the chart. It's the fresh level. It's got the odds enhancers that make it really strong. Odds enhancer number 1, strong move away from the level. Odds enhancer number 2, price spent very little time at the level. A very important odds enhancer, it is fresh. It's the only one of these 3 that we found that is truly fresh. Okay. Profit zone looks like it's going to be fine. Right, price has moved quite a bit away from this level. And let's go with that. So what I would do, first thing in the morning, I just go find a bunch of these, and I just take them when they hit. Okay. I'll also find the opposing levels on the dollar. That helps. Vico, if you can, I'm just not 100% sure what you're asking there. Let's see. Oh, I'm sorry. I just saw your other question. Hold on. First level, is it okay to put your lower line to include a strong drop in price? Your lower line for supply, you want it to be right at the origin of that drop because that's where the bank is selling. That's the lowest price the bank is willing to sell at. Okay, there's a range, but that's the lowest price the bank is willing to sell at, and you see right there when at that low price you run out of buyers. Make sense? So that's where we want to sell at. The problem you're going to run into, your best levels, you're going to put your order right here at the bottom line, and you're not going to be filled. Right? The bank will get filled on some probably, but you won't. So what we'll do a lot of times at Online Trading Academy is get in a tick or 2 before the level. Now, if you do that on a trading floor, you know what's going to happen? All right, you're either going to get beat up or you're going to get yelled at for sure. You might get beat up, but the 2 things are going to happen for sure. You're going to get yelled at, and nobody's going to trade with you, even if you're willing to pay their price. Okay, that's what's going to happen, because again, and this happens on the trading floor all the time. So here's where the big stack of orders are, right? The big filling broker for the bank or institution selling right here. Now price is coming back, and that guy only gets paid when he fills orders. He cannot trade. He can't trade his own account, can't trade other account. He only gets paid. He gets paid maybe 10 cents or 25 cents or whatever. Years ago, $1 every time he fills an order. So think about it. You're in the pit trading your own account, and you're selling at this level. You have a big stack of orders to sell here. Now price almost gets there, and you know he's got his orders here because you see him. Now price gets a tick before that, and you sell a bunch. What do you think is going to happen? Not only is that guy not going to trade with you, but that whole trading pit is going to, they're going to eat you for lunch. Nobody's going to like you there. Nobody's going to trade with you. You're going to be out of the pit pretty quick. Okay, because you're in other words, you have to. It's a game of what am I trying to say? The groups work together, even though they're all trading, against each other, so to speak. They make sure that the filling broker gets filled first, and then, but then when he has orders, but then who's he going to take care of? He's going to make sure the people around him that are letting him get filled and taking care of him, or it's a nice relationship they have. Okay. There's another thing that happens when because now that the broker is just feeding individuals in the pit, almost, guaranteed, profitable trades. But now one day the broker has a problem. The market's moving fast, and he's filled, and this happens on trade desks. It's not just in a trading pit. Now the market's moving fast, and he forgets to, buy a certain amount or sell a certain amount at a certain price, or he overbuys or oversells. Now he's got a mistake. Okay, now there's they call it an out trade, right? There's a problem. Who do you think eats his mistake? You think he pays for it? This happens today on the trade desk. He's not going to pay for it. He's going to ask you, the retail trader, to pay for it, or the people that he's feeding all these trades to. That's how the whole game works. It happens today as well. Yeah, Boyke, that's exactly it. So it's a fine line there. Actually, we have an OTA instructor. He's a great guy. He traded in the currency futures years ago. I was down there. I was down there his last day. He had been down there for years, many years. And I was there his last day at the exchange, and he was carried out on a stretcher. And he wasn't directly involved in a fight, but what happened is that this exact scenario that I'm telling you happened in the Canadian dollar pit. And a big fight broke out, and the fight moved back to the pit and pushed him back. He stumbled backwards and hit the back of his head on a metal timestamp clock. And he broke his back years earlier, so he cracked another vertebrae or something. He's okay now, but he's carried out on a stretcher, and that was his last day on the floor. So it's Bob Dunn. He'll tell you the story if you ever see him. Okay. Yeah, so you've got to be careful there. So what's nice about this though is we can front run the institutions and banks the legal way, right? Nobody's going to come after us. So on a good level like this, we get in just a touch before it. Okay. Let's go back to Euro for a moment. Okay. And what I'm trying to do here, I know, what I wanted to do today, and hopefully it's the right thing to do, is really just explain exactly what's going on. Most people, there's a game being played here. Every day, every minute of every day, 24 hours now. It's a global 24-hour market, right? The people that know what they're doing get paid from the people who don't. The people who lose money not only don't know how to play the game, they don't even know the game that is being played. And they're the pawn. Make sense? Okay. Everything about this financial system is designed to deceive people who don't know. Okay. The euro's just sitting here. But remember now, so there's a number of people with us here. I don't know how many people are in our group here today, but maybe I can even look. Let's see. 100 people. All right. So now if we all sold here right now, that would be a little tricky. Okay. If we all sold right here, and that's why in the trading rooms we don't exactly do it that way. Like in other words, we'll give you the level, but we're not saying, okay, everybody get in now. We don't do that. And the reason is because we would all have a tough time. If we all sold here, who are we forcing to buy? Who's going to have to buy? Who's going to have to buy if we all push the sell button? 100 of us, let's say 100 of us, sell 10 of these right now. Yeah, the market maker, the bank, the institution, they're going to have to buy up here. Do they want to buy here? They're selling. They don't want to buy. Right? So if I'm an institution and that happens, I'm going to buy it, and I'm the institution. I'm going to try to stop everybody out. If you read, I don't know if you read Lessons from the Pros, but the article I wrote that came out this week is exactly on that point. Okay, it's exactly on that point. That's why sometimes you'll see, price comes out of this level and too much retail sold here. Okay, in other words, if too many of you or us sold here, and prices come down, a lot of times you'll just go one tick above this or two ticks above this, and then prices will fall. Because retail's got to get stopped out before prices can drop. Make sense? Let's see. Yeah, so Schemo, good question there. So Schemo's asking, how come not a pivot high, pivot low, not supply or demand? No, those are very different from supply and demand. Yeah, those are the common levels that you read about in the trading books, but that's not at all. In fact, those pivots are never going to be fresh supply or demand levels, because those are all rallies or declines into what is already a fresh supply and demand level. All right, let's go to BP. All right, let me get this chart back. We're looking at a 10-minute. Remember, even though we're day trading, we haven't mentioned this at all, but we always start with the small time frames. I'm sorry, the big time frames. Just like I did with the Aussie, right? We saw that there's been a big decline already, and anyway. All right, so let's take a look. Here's the weekly, daily. So we see on the weekly, obviously, there's been a big drop, and we're getting closer and closer to this level. Someone just asked, Scott, I think you did, about the pivot lows. You see this level here? Let me just see who asked that. I forgot. Schemo, sorry. So Schemo, your question, why isn't this a demand level, for example? Yeah, we would never call that a demand level. In fact, we expect, see how prices went right through that? We expect that to happen. That's the textbook version of support. But remember, there are lots of flaws with conventional support resistance, things that are never considered. So that's just going to be a pullback into, something over to the left, right? So here's the daily. If we take an X-ray snapshot of that weekly, you see this pivot low is right into this demand level over here, this fresh demand. Okay. So this over here is the second pullback into the fresh demand level. So we expect prices to go to the, right? So right here, prices went all the way to the bottom of this demand. So we expect prices to go right through this. That's what we just saw happen live in the euro. Okay. Remember, if trading were as easy as reading the books, everybody would probably be making money. That's just not the case. Okay. I'm sorry. Let's see what we're coming into now, though, on that by looking at the daily. I would say the next significant level on the daily is down here below this little low here. This area down here is still fresh, but none of this is really fresh or demand in here. Okay, so given that information, we can quickly go to smaller time frames and look for some trades. John, we'd always want to know where the origin of that level is, not the swing high. So if you see a swing, for example, I just saw the swing low, that just told me to go down to a smaller time frame and figure out where the fresh level is that caused that swing low. Okay, so then I want to say, okay, is that swing low, did that swing low completely absorb or fill all the demand down there? That's what I was just looking for. And it looks like it did because it went all the way to the bottom of that level. So that's much more important objective information than just looking to swing high or swing low. Okay. All right, so the pound. Let's see if we can find some supply here. We had this level here, but we've already kind of had a pullback into it. Not really going to draw a level on there. There's a nice little level on the 60, a couple of them, but we're not anywhere close to those. Let's see if I can find something even smaller. And right now what I'm doing is kind of pretending, okay, if this was the morning, you have this little level in here. You see how we're just falling off this little base right here? That was fresh. It's not fresh anymore, though. See that? Okay. Now, you'd only short this into that if this low took out any demand over here, and it looks like let's do this. Okay. It looks okay. I mean, we just missed it. We're let's see, 6 minutes late. But yeah, so here's that level. Here's the first pullback. Okay. There's no fresh significant demand until maybe down here somewhere. All right, let's move on. There's not a whole lot else to look at here with the pound. This euro's not really moving. It's falling a little bit, but okay. So now the euro has come back down here again, and let's see what's below. You still have a little stuff right here. You see this area right here? This is what I want to show you is really the perfect scenario. See how I'm down to a 2-minute chart, and all you have is all this big green. This is the kind of move you want on a retracement into, this fresh supply here. So let me show you. Okay. So when prices fall on this level, I want to see a big, strong rally back up to that level with no basing in it. Because that means, 9 out of 10 times, price is going to come right back down through that level at the same rate as it did when it rallied into the level. Okay. On what time frame, John, are you talking about? I'll look at it. Which time frame? Back on the 5? Okay. So you're talking this? Would this be a supply level? No. To me, never. No. And that would just be... I don't know if were we up here? No, that would never be a supply level. That's going to be, when you see that, well, I shouldn't say that. I mean, inside here you might have something, but no, this picture right here in and of itself would not be a supply level. Zoom in on a 3 minute. Like I said, if there's a level inside it, yeah. Maybe this right here, the bottom of it, this area right here, you're saying? If you took this as supply, yeah, oh, good eye. But even here, I would not put my stop above the pivot high. I don't think you need it. I would put my stop right above, especially if you're trading the futures, and this level is 95. I'd put my stop at 96 or 97, right in there. Probably 96 is fine. If this is going to work, you're not going to need more than that. Make sense? Now, John, if you're finding these little ones like this, my guess is that you're doing pretty well. You're finding success with that. That's my guess. And John and I don't know each other, I don't think. But that would be my guess. All right. Well, hopefully, yeah, those little ones that a lot of people don't see are sometimes some of the best. Those are good. Okay. So again, if a bunch of people are short this, I mean, one of the reasons, yeah, we've just got this level here, so. And again, if you've got, again, everybody's going to be different, but if you have a, $20,000, $30,000 account, and I found it to not be that difficult to let's say you take, I don't know, 2, maybe 3 of these in a day. If you're just doing 300 here, 2 to 400 on the next one, we have people. I've seen that done, fairly with a lot of consistency, by people in the program with kind of that, $20 to $30,000 account. Okay. I suppose you could do it with less. Well, you could do it with less. You certainly could. And again, I'm being very general here, but I've seen a lot of people able to do this, making 200 here, 400 here, that 500 to 1,000 a day. You certainly could up the size if you want, but to a lot of people, they like that. That's fine. We've got other people that completely want to do something different. They're doing 2 to 4 transactions a month in the options, and making a much greater return. So anyway, I think you get the point. And there we go. There's my email address, sseiden@tradingacademy.com. Hopefully this was helpful, and nice job if you're in this. You're not really you're not up a ton, but again, that's not what this is about. This is for that short-term, consistent income. Just remember all the details here, and we'll have another webinar coming up soon. So thanks again for your time, everybody, and have a great day. Thanks again.